excited. I mean, Eric and I are very excited. We're doing a mashup of the capitalist conversations, the capital conversations, and my compassionate capitalist show to interview Sig Mosley because Sig said yes. He said yes. Now that he's like semi-retired, he's sharing his pearls of wisdom around the internet in these interviews, and we got on the list. He'd been on my list forever, and I've known him for a long time, and it was like, why not ask? What am I waiting on, right? And so it worked out really excellent because he truly is the epitome of a compassionate capitalist. And as you hear him tell some of his story and some of his pearls of wisdom today, you're going to understand that the passion that he puts into supporting entrepreneurs, their innovation, bringing them to market is that part of and making money. Okay, let's make a point of that. He's made a lot of money doing this, making money as a capitalist. That is the compassionate capitalist. So he's the managing partner of Mosley Ventures, and since 1999, he's probably been the most prolific Southeast investor, investing in 120 startups with 82 liquidity events. We're going to dig into that in a little bit. He's currently the record holder of the largest Southeast venture deal with a 5.7 billion acquisition of TradeX by Ariba. And Mosley Ventures, as it's winding down, and we're going to talk about that as well, is a for entrepreneur fund as they invested in the people. And I remember that we have a question when the first time I met with Sig one-on-one, and what he told me about that as well. The team at Mosley Ventures believe in enabling founders to build their vision into successful companies. Welcome to the show, Sig. So glad to have you here.
Thank you. I'm happy to be here.
Terrific. Now, Eric has to read his disclaimer.
Let's get our disclaimer out of the way. The information provided in this podcast is for educational and informational purposes only and is not intended as financial advice. The views and the opinions expressed by the host and guests are their own and do not necessarily reflect the official policy or position of any financial institution or organization. You should always consult with a qualified financial advisor or conduct your own research before making any investment decisions. The content of this podcast may include forward-looking statements that are subject to risk and uncertainties. We do not guarantee the accuracy, completeness, or usefulness of any information discussed. By listening to this podcast, you agree not to hold the host, guests, or any affiliated parties liable for any losses or damages that may arise from your reliance on the information provided within. And there we go.
Yeah, we're official now. The SIG sits on numerous boards of organizations feeding the entrepreneurial and investor ecosystem, along with numerous boards of his investments, and has been recognized in just about every way you can imagine, from the Georgia Tech Hall of Fame back in 2007, Lifetime Achievement Award with Ty in 2011. And he and I are fellow alumni from Emory University, the only, undefeated football team in the Southeast.
Yes, that an easy one to accomplish.
Yeah. So Sig was likely the first professional angel in the Southeast. In Atlanta. He's got this nickname of the Godfather of Angel Investing in Atlanta. And he and John Imlay decided in 1992 to put $4 million to work in early stage companies. The goal of Imlay Investments was to grow the startup community in Atlanta by encouraging entrepreneurship. They stayed on mission for 20 years. After Imlay stopped investing, Sig continued by creating his VC firm, his super angel VC firm, Mosley Investments, in 2012. So Sig, my question to you: how did this start? How did you meet John Imlay? How did you come to want to start investing in entrepreneurs and fuel this innovation? How did you become that compassionate capitalist? Were you always going to be an angel investor, or did you get an appetite from working with Imlay Investments? Just give me it's always been, I always wonder that about people that commit their lives to the service that you have.
Well, I met John Imlay at a company called MSA. He and I both were employed there. And we went through some ups and downs. We got up to about 1,000 employees. Then we went through a bankruptcy and went down to 45 employees. And I was the one person that they kept in accounting. So John and I worked very closely together from what we 1970 to 1990. And that is when we sold MSA to Dun and Bradstreet. For all practical purposes, my job went away. So I knew John wanted to create a family office. So he and I negotiated a deal where I set up his family office, I set up the family foundation, and the third part of what he wanted to do was to give back to the entrepreneurial community through what is now known as angel investing. It didn't even have a title when we began. So, as you said, John allocated about $4 million, and we just began looking for young entrepreneurs and young companies. We had a great network of ex MSAer here in town, so we found all kind of good deals. The very first investment that we made, it was brought to it by a former VP of sales at MSA. The second deal we did was brought to it by the former CEO of Petrie Software we had acquired. So I had done acquisition and divestitures at MSA. I had a great mentor, a gentleman by the name of Gene Kelly, on how to look at numbers and how to look at companies and so on. So I took what I had learned at MSA and we just began doing angel investing. So I just sort of got thrown into it. And the more I got into it, the more I enjoyed it. Therefore, I just kept doing more and more. And
Yeah.
so over that 20-year period, we did 122 deals. Uh, had quite a number of exits. We made money. TradeX helped with the money making, but so did ISS, the company with Tom
Yeah.
Noonan and Chris Klaus, located here in Atlanta.
So did you invest in ISS through Imlay initially?
Yeah, yes, we did. Because that was
Okay.
back in 1990, I believe 1996 that we made that investment.
Yeah.
Uh, and that was a funny story in itself because they had used credit cards to fund the
Yeah.
company and they had run out of credit cards. So, but see, we knew Tom because Tom was ex MSA. And so we
Oh,
knew what he was capable of. So when they came to talk to us, ultimately we made $100,000 initial investment in them, and that helped them to get a venture round put together by Greylock and Sigma Partners.
okay. So as part of that, so did um, now when you were, helping to screen and scrub and decide and all this stuff with Imlay, were you co-investing your own money at the time and kind of get building your portfolio, or did that not start until later?
No, that began later because I didn't have that much actual cash available. Unfortunately, when you go through a couple of divorces, it tend to uh, hurt your liquid position.
That could be an understatement.
Well, yes,
Yeah,
trying to be kind.
yeah.
Yeah. Okay. Understood. All right. So, you have anything you want to ask along those lines, Eric?
So,
Before we're going to come to the exit things in a minute. I know you're chomping at the bit on that, but do you about the getting started part?
no, I mean, so you guys went out and made this first investment and really helped the company get towards a larger venture capital fund. what sort of advice and guidance did you give them that allowed them to go from your small investment to a larger fund? I'm sure there was some coaching along the way.
Well, they were particularly with ISS because one of the things that they needed to do was sell. And John Emway was the ultimate salesman that you could have. So John was able to work with Tom and Chris about how to build out their sales, how to build the sales force, and so on. And then I was able to work with them with their venture people on financing and so on. And so in the case of ISS, we invested in 96. They actually went public in 98. And then in 2006, they got acquired by IBM for 1.2 billion.
Right. That's one of those big old success
How,
stories.
I remember driving by the old ISS building that's now IBM up in Sandy Springs. What sort of return did you guys get off that investment? Because that was an impressive one for the books.
That was a 30 to 1.
Mm-hmm.
Wow. Okay. So when we first met, Sig, I was managing the network of business angels and investors, and about that time, I think you were entering the wind down in 2009 before starting Mosley Investments in 2012. And I asked you for a meeting, like you did with founders, and I asked and I still remember meeting you at the Starbucks over there at Georgia Tech. So and I asked you, what did you look for in founders? And you said you'd like them to have some corporate experience, but not too much because they get an attitude about privilege, work ethic. You wanted them to have the work ethic, and and that was like I remember that because they still had to be hungry to achieve, right? And
Right.
and build out. So you want to address or talk about like what should angel investors that are listening to this now look for with founders that they believe have the gumption and the fortitude to go the distance, and also be coachable, right? Because they have to be coachable.
Oh, yeah, had to be customer. Well, you begin with, you got the entrepreneur need to have some knowledge about what he trying to build. You don't put a telecom person trying to build healthcare. So they
Sure.
need to have some knowledge of the area. It helps if they have worked in a company before. Now that help them understand how to solve problems. They need to be coachable, but they also need to know how to hire employees because a number of entrepreneurs just want yes people around them. That is not good. You want people who will challenge the entrepreneur to be sure that he's thinking all the way through. And when I say coachable, you want them to take into account what you are recommending, but they need to go away and think about it and be sure it's the right thing. And if they don't agree with you, they need to come back and tell you why. And you want somebody that honest, trustworthy. One of the things I like to do with entrepreneur is take them out for a drink just to see how they treat waiters and so on. Because if they
Ah,
behave differently in the social world than in the business world, that tells you something about them.
yeah, that's a good idea because that's kind of, I remember when I first went into the corporate world, back then we were coached on, that when the interviewer, the exec, whatever at IBM takes you out,
Yeah,
it's like do one drink, right? Don't order anything messy,
yeah.
be nice and polite, all
Mhm.
that stuff. So that's really interesting that is one of the sort of, unwritten tests that you run by.
Yeah.
So
Well, and I've got friends that are involved in hiring at their companies, and it's amazing if you go to lunch and ask some random questions, the responses you can get.
Oh yeah, and see what you want to see, because you want to see what that person is really like, because he may be a totally different person outside of work. And while that is not always bad, it's something you want to be aware of before you
Mhm.
make an investment.
My wife tells a story of they were interviewing a potential new hire at her company, and I can't mention the name. And so they go out for lunch, her and one of her coworkers with this potential hiree, and they're talking, and they're like, "What's the craziest thing you ever did?" And she goes, "I had my twin sister take the SAT test for me using my driver's."
Oh,
Oh,
And you think, "Oh
not
my,
the time for full disclosure.
oh my God," and then so they're kind of asking her how that all worked and all that, and then he goes, "Well, what happened when your parents found out?" And she goes, "What was my mom's idea?"
Ah,
Gone.
yeah, yeah,
She was going to get hired. I mean,
yeah, yeah. But see, that the kind of thing you don't want in
yeah.
your employee, particularly as entrepreneur, because you want somebody who will think on their own and who is really honest and trustworthy. And how can you trust somebody that had done something like that, particularly when their mom suggested it?
yeah, you can't
No.
trust them. I mean, in my own businesses, because I have Mountain Share and I have the consulting and the other things. Um, if we can't trust someone, we don't work with them.
Yeah,
Yeah.
You catch them lying.
yeah,
That's not the first time they lied. That's just the first time you caught them.
Yeah,
right.
yeah, yeah.
And
Yeah.
Well, you have any, Sig, you've had any experience with that a character flaw that unveiled itself after you invested and
Oh
you
yes,
were
yes.
able to fix it? You have
Oh yeah, you find them. You know, trying to find somebody and determine whether or not they're coachable is one of the hardest things you can do, because they may appear to be very coachable. They may listen when you are negotiating the deal with them. They may say all the right things. And the one thing that really is challenging is when it comes time to replace them as the CEO. Oh, they will have told you, oh, yes, we'll do what is good for the company. When the time comes, I'll step aside. Well, that almost never happens.
they
yeah,
don't
they're always
understand
on their best behavior when they want your help.
Oh, yeah.
rich founder versus a poor CEO. That's the thing I tell when I identify when they come to me, I identify real early if they're not coachable because I tell them why they're not going to get funding and they don't want to hear it. Right? It's
Right.
easy when you're an investor and you just go next.
Yes.
I right, and so and they and I'm like it's part of my red flag checklist.
Yeah.
Is this guy coachable or gal
Mhm.
coachable? That if they need to do more homework on knowing their market or understanding, pivot a little bit or whatever it is, they just sometimes they and I know because what is it 100 no's to one yes is
Yeah.
sort of what you're supposed to have. So you
Right.
see a lot of companies and that for that all those things they don't check the boxes of being serious about taking this product to market or building this company and recognizing what they don't know that they don't know. You know what I mean?
Right.
Like, and have a plan. I don't know that, but I'm
Yeah.
going to figure it out this way, right? And so,
Right.
So from my experience, because I work in the public markets, and we work with companies that are trying to typically get a private placement and get publicly traded, and your requirements for being prepared are pretty strict. What's generally these companies come looking for angel investors? How well are they generally at getting their house in order to be presentable to you or somebody else?
Oh,
after you've met with them, perhaps. I mean, I know a company I met with the other day said they've met with you a few times. You keep saying, "Well, not ready yet. Come do this," and then they come back.
yeah. Well, companies vary all over the place in that regard. Uh, One of the things that I find that entrepreneurs do not do a good job at is knowing their competitors. And if you don't know your competitor, then how can you know your market?
Exactly.
And, up until maybe 8 years ago, entrepreneurs would come and say, "Oh, I know the problem. I got the solution. I'm going to build it." And we went through that. They went to sell it. It didn't work. So you rebuilt it. And you did that 2 or 3 times. But once you began with the accelerators and they began to teach customer discovery, that has improved the ability of entrepreneurs to really better know the market if they do the job the right way.
Hmm.
You have to be independent. You have to ask questions that are not leading, because you can lead a potential customer to tell you anything. So you have to try to independently ask good questions to find out what the real problem is before you go build a solution.
Yeah, I tell companies when I'm coaching them and I do this thing that there's never a situation where you have no competition. You know how they'll go, "Oh, there's no
Yeah.
competition,"
There's
because they're
always.
making some new,
Yeah.
mousetrap. And I say there's a way, there is the competition when there's no clear competition is however they're solving the problem now, because now you have to create awareness that there's a different way to solve it, and they have to decide, are they willing to pay for whatever way they're solving it, right? Like
That right.
when I was with IBM, I joined in the beginning of the PC revolution. And when I was this little sales rep, going around and selling or talking to the people, the thing we were taught to sell against were our own typewriters,
Yeah.
because that's how they were solving the problem then.
Mhm.
And tell them,
Mhm.
like, and talk to the secretaries, not the boss, because the secretary was the one that was doing, the whiteout and having to retype everything, and talk to the people in bookkeeping, right, about the
Mhm.
spreadsheets. And it was, that was, and that always stuck with me along the way, because it was after us came Dell and came Compact and came, Apple was there, but we didn't really
Right.
take
Yeah.
them serious, right? And so, at that time, they were education market. And so,
Yeah.
it was, so, that's the thing. There's always, the competition. And I see entrepreneurs a lot of times pick and choose so we can beat this guy. And then I'm like, I'm on the
Mhm.
call with them. I'm like, Google whatever, and I look it up, and I'm
Right.
like, but what about this company or that company? Oh,
Yeah.
well, they're
Well, well, see, and that is where you have what I call two types of competitors: who is competing with you today and who
different.
will compete with you tomorrow. Because you can't just ignore people like Google, Microsoft, and some of those. You have to figure out, you have to be aware of what they have an interest in, what they might want to develop and do themselves versus what they want to buy. So you just have to be aware of a much broader market in the competition area.
But
And also there's, we're we're geographically separate. So something could be developed in another part of the country in a different manner, trying to solve the same problem. And it's, whichever one of them, I mean, it's like, that's like, you don't even know. You can't know.
Yeah.
You get some transparency with crowdfunding platforms, but those are always really infancy and not usually high tech. So,
Oh yeah. Well, did many years ago. In a period of 5 weeks, I had 5 different companies come to me solving the same problem, and they were all located here,
oh, well.
and none of them knew the others.
Man,
yeah,
that's a
that's
cat's
not
eye view,
surprising.
right? That's like
Yep.
a bird's eye view, whatever that is.
Hmm.
That's the thing. In my course, I teach, part of it is decide this problem that you want to solve, because you can just be overwhelmed with all the opportunities out there. And then,
Yeah.
go to find three companies, at least three companies that are trying to solve it. So you can discern which one is doing it the best according to the criteria,
Right. And part of that all come back to the question, why now? Why
Uh-huh.
is now the right time for your product? Why wasn't it the right time a year ago? Why won't it be the right time a year from now? what makes today right?
That's a good point.
One of the things is years ago I wrote a couple newsletters, and I used to always say in my newsletter, bull markets were created by two things typically. They were created by changes in regulation or politics, which is somewhat one and the same. And the other thing is new technology. And that those are the two things that drive your answer to that question, or at least they should, to the most part.
Okay.
I've also seen a lot of bull markets in certain sectors created by government incentives, and those always blow up.
Well, of course,
Yeah.
anything that get created by the government has a tendency to blow up at some point.
I'm waiting for the government ran grocery stores in New York City to see how that works.
All right. So now, Sig, we mentioned earlier that is it 120 startups or is it more than that?
Well, I did 122 with Emily.
Oh,
I did 23 with Mosley Ventures.
okay.
I have done 9 with Zane Ventures,
Oh,
and
right.
then I have a handful that I have done personally. So in my total number of total deals is probably closer to 200.
Wow. Okay. So, yeah. So I was going to ask how many of those in Imlay, but now you explained that, and
Yep.
it had listed as 82 exits with only a few that were public companies. Is that still there? Like, where are you with that?
Well, I don't really keep track of all of that, between because I had Emily, I had Mosley, I have Zane, you know, and particularly now that I don't intend to do another deal, I'm not so worried about keeping track of exit and so on. And, what is an exit? You get half of your money back. Is that an exit? Well, yes, it is in one sense. So so, and well, I had one deal. I was in the deal 21 years and I got back the amount of money I put into it. Well, an exit.
Yeah. Okay. All
Yeah.
right. All right. So, well, I think Eric wants to ask about, how many are public and like, were you involved in the M&A transaction stuff? Because,
Yeah.
a lot of
Well,
times you were an active angel in some of those ones way back when.
Tell
But
us about
like ISS.
TradeX. For all of us
yeah,
that aren't familiar, because I was doing other things, tell us about the TradeX deal, what it was start to finish.
well, trade out for an interesting deal. I met them in 1995 and I liked the company. I liked the CEO. I liked the CTO. I did not like their business model. So I negotiated with them before I put money in to make a change in what they were doing.
Wow, that's coachable.
And so and then I was in there for 4 years and I befriended the CEO. And so he wound up helping me stay on the board all 4 years because it's very rare for an angel to stay on the board once the VCs begin to come in. But Daniel was able to keep me on the board. And so then in late 99, we were looking to take the company public. You may remember particularly in the 99 era, it was exuberance running all over the place.
It was
Yeah.
So
Yeah.
insane.
so we had a board meeting planned and we were talking to investment bankers and looking to go public. And the company called Ariba came and put an offer on the table. And the offer was roughly $1.8 billion. It was an all equity deal. And so we made some very good decisions as a board. One, we decided not to go public because, as you may remember, it would have taken up 3 to 6 months to go public. We would have missed the window because of the .com bust, and we
Yeah.
would not have been in good shape. So we decided not to go public. we decided to be acquired. We negotiated a set number of shares in the company, in the new company. We just wanted to know how many shares we were going to own. Then we took and had no floor and no cap. So if the share value went up, we got more money. If the shares value went down, we got less money.
Yep.
Well, we were very, very fortunate that the shares tripled in value from the time we signed the deal to the time we closed. And the other thing we did was, because Ariba was a California company, we were able to get the shares tradable on the day we closed.
Yeah, it filed an S4 registration statement and got free trading shares. So your return in terms of multiple, was that 100 to 1 or something like that?
180.
180.
Woo! That does set you up good to become a really good, generous angel investor.
Well, it did. It made up for all my sins otherwise.
Yeah.
Yeah. um, that has got to be the greatest investment I've seen in my lifetime, right there.
Yeah. Well, and what was interesting, I showed it to everybody in town, all the VCs, twice, and nobody wanted to invest. The only other Atlanta investor we had was UPS. So I had shown it to UPS and had convinced them to invest in the company.
The UPS Strategic Fund.
Yeah.
Interesting.
Yeah, they got
So,
a fund.
yeah. So, to that point, any ones you saw that you said no to, and then they went on, and later you're like, maybe I should have.
Well, yeah, because I looked at a number of companies that were not really technology companies. I don't consider them to be technology company, you know, because you are loaning money to a SMB type company. That's not a technology company. You may use technology to go through and figure out yes or no to loan, but without the bank and the money, you have no business. So I turned some of those down. The one that I miss, you can call it a miss, would be MailChimp.
Okay.
Because I met with Ben, I tried to talk Ben into taking the money, and then Jack could not do it. Now, also the other one that was to fall into a similar category was David Cummings. When
I
he
wondered
had
about that because he's quoted on your website, and I was like, did you invest in Pardo?
no, I did not, because he and I could not come to an agreement on valuation.
Hmm.
And so I did not get into that. But, I don't necessarily regret those. Uh, you can't win them all. So, and you need to slip to your principles and do what you think is right.
Yeah.
Now,
And you guys have a great I'm sorry.
no, yeah, no, David and I have a good relationship.
Right.
Just like Ben Chestnut and I have a good relationship.
Yeah, because I
Uh,
see David invested in Mosley Ventures, right?
right. And so did Ben.
Yeah. So let me ask you, and all these exits, how many were mergers that you got involved in to
Well, the vast majority were mergers. In the 35 years I've been doing this, I have only had 2 IPOs. And that is just kind of crazy.
that it is. So did you help put a lot of these deals together?
Oh, yeah, yeah. But, remember, anytime that you have a VC involved, they tend to take the lead. So, you work with them, but they would say that they did the deal.
Well, yeah, just like in my most recent situation, we uplisted, and 15 days later, somebody wanted to come and give us 12 times the amount of capital we had in our books, and I'm like, take the money.
Oh yeah, no, I'm a big
Boss.
believer. I'm a big believer in taking money. So
Yeah.
you look at the two companies that went public. One was ISS, of course, went public and then ultimately sold to IBM,
Yep.
and one was Witness Software, which went public and then got acquired by another public company. But those are the only two IPOs that I have had during my career. The South, you look at the South, when you look at technology companies, you can remember, Eric, you're not in a technology business per se.
Yeah.
But, you look at technology, you don't find that many public companies in the Southeast.
Oh, sure, right. That are
You
technology.
know, Red Hat was probably the one good exception that was a technology company, but then it went public and then got acquired by IBM.
I've had a long standing belief ever since I first met you when you were back with Imlay in the late 90s that one of the reasons why we do not have a lot of public tech companies or as many public companies as we should in the South is we have a shortage of investment banks in Atlanta that do underwritings. And that it's we just don't get that smaller level of investment bank that can come in and get these companies up in public where they can have an easier access to capital.
Well, that is true, but part of it is also driven by investors who are in the company that they get to a certain point and they are ready to exit and decide that they want out. And then also a number of your CEO entrepreneurs, they make 5 to 10 million. They're very happy.
Yeah.
Uh, because you got to look at the Southern culture. We are conservative, laid back, and we don't talk a lot about money. So an entrepreneur made $10 million, particularly in the 90s. He went to the beach, bought a boat, bought a Cadillac, and was happy as large.
There's a lot of good lakes up in Atlanta to be on. I spent
Yeah.
I spent 20
Legendary.
years riding around Lake Altoona on my boat.
hmm
And it was
And
well worth it.
yeah, well, today, luckily, we are getting more repeat entrepreneurs. They are beginning to come back and will do it again and again. Chris Kraus is a great example of somebody who just continues to give and give and give.
Hmm.
Yeah, and build, right? He's doing some exciting stuff, and even
Yeah.
now, with David Cummings, he had a series of it, and now he's putting his mark on the city and the stuff that he's building and the ecosystems that he's contributing to.
Oh, yeah,
So,
no question.
And I've had 3 exchange listings in less than 3 years.
yeah,
Yeah.
there you go. Time for
Yeah.
you to become a super angel, Eric. All
And
right,
Yes.
so as
stock
you're
keeps going
winding
up, I
down,
will.
yeah, as you're winding down Mosley Ventures, is there somebody that's going to pick up one of your team members that's going to pick up that baton and carry it forward the way you did after Imlay?
No, no, we are just going to let Mosley glide into the wind.
Okay. So just as you wind down those particular company,
Is your staff starting funds of their own?
yeah, that's what I kind
Uh,
of meant.
no, they both of my partners in Mosley Ventures have gone on to do other things besides venture capital.
Okay. So now, so one of the things you brought it up earlier with Shila's Zane Ventures, I mean, your thumbprint in the Atlanta community is also very much in elevating the Atlanta Black entrepreneur community with Zane Ventures as a managing partner over there, right?
A venture partner.
Venture partner, and with working with Jay Beerley over at the Rice Center, helping to get that going. HT Russell Innovation Center for Entrepreneurs. That level of commitment is kind of unique among most angel investors to open doors to opportunities for diverse founders. That it hasn't always been the case in the Atlanta community that we have. Some of the things I is very active trying to do that as well. Was there a trigger event for you, or have you been, on your own way, proactive in this way all along?
Well, I don't know that they were a trigger event per se. If you look at Mosley Ventures and Emily Investment, we didn't go our way to invest in underrepresented uh, entrepreneurs. When I came out of Mosley, I wanted to see what else I could do to help grow the community. And this was back in 2018 or so. And I had a couple of free opportunities. I had a couple of venture funds that I was talking to about being a venture partner. And then Skylar contacted me at Zane and basically uh, outlined what she wanted to do. About that same time, I got introduced to the Russell family and got involved in what they wanted to do because they were really trying to do something for, the underrepresented Black entrepreneur here in town. And I just thought it was a great thing that needed to be done because I could look at, the ATDC, ATV, a number of places, and they were very low underrepresented entrepreneurs being involved. And you began to read about Forbes and everything. We were becoming the place. You also had Paul Judge, who were doing things. And so I decided that I could make a greater contribution to the community by helping get out some of the other underrepresented entrepreneurs and get them into the community and help build that side of it.
Very nice, and it's really appreciated. It's noticeable.
So,
All right.
having been around several funds as they wound down in the past, can you tell us what's remaining in your portfolio and how long you think it'll take to wind it all down? Are you going to be busy for 6 more months or 3, 4 more years?
Well, just to tell you about Mosley Ventures, we are just completing in November year 12 of Mosley. It was a 10-year fund, but we had the right to add 2 years to it,
Mhm.
and we had to do that. We still have uh, three companies that mean something in Mosley. So we have asked our investor to give up one more year that we are going to figure out some way in next year to get out of the ones that we are in there. Zane Ventures still has 7 companies because Zane is reasonably new. And so I will be involved in there for, several more years.
Yeah.
When I was on your website, I noticed that you had invested in Flock and Bark. Bark is very popular with all the parents and Boy Scouts for helping with their home electronics, and I think it's pretty incredible when I see something like that I have in my own house, and that you help back that. And then Flock, we've looked at that for our subdivision, our civic association.
And well, Mark is one that we were able to get out of actually this past year uh, through a secondary, somebody already an investor in the company were
Mhm.
willing to take it out. And so and that how you hope to either sell the company or you hope to find somebody who will take you out that already involved.
Mhm. That's an ideal way. And then how's things going with Flock? I haven't talked to those guys in a while.
Well, actually, we're not an investor there. I don't know where you saw we
I
invested.
swear I saw that in an article or on your webpage or something.
No,
Well,
no, but you aren't the only one who has said that. But people,
it's not
people,
just me.
no, people assume that I have invested there.
Okay.
I think Flock's going to be revolutionary because they have built-in license plate readers, and so if somebody comes into your subdivision in a stolen vehicle to case it out, they automatically check the plates and
Yeah,
notify the local police.
right. But they also have competitors too. So
Yeah.
I will
So
have to look
Sig,
for those.
so Sig, as we start to wind down, you're a humble guy, willing to meet with anyone. The only thing I think you might be a little snooty about is your taste of fine wines, because you do have
Oh,
yeah, I
that, right?
probably am a little bit on that regard because if I go to a restaurant and they have cheap wines, I probably won't order it because I like my quality of wines.
quality over quantity.
Yeah.
Yeah.
So I want to know how the SIGI Awards came about. And for those that don't know, it is an annual celebration of outstanding early stage metro Atlanta investors. And instead of a statuette, winners receive a bobblehead of SIG. It is the most adorable thing. I put it on my dream board. I'm getting one of those before I die. And not because somebody else died.
Yeah, yeah. Now, the way it came about was two friends of mine approached me and said that, I had gotten a number of awards, but they still wanted to do something to honor me, but they wanted to create an award and they wanted to call it the SIGI, but they wanted to, they wanted me to do it. And I said, okay, I will do it, but I have one request. I designed the award. And I had another uh, entrepreneur years ago create a bobblehead of me online.
Oh,
It wasn't physical, it was just a design. And so I decided that a bobblehead was something that would be unique. And so they put me up on a table, rotated me, and took about 20 pictures, and we created the bobblehead. And so what we do is we give out roughly 4 to 5 bobbleheads every year for certain awards to angel investors who don't get recognized. Now we just feel that that is something that we need to do to help keep the community growing. Entrepreneurs get recognized for being the entrepreneur of the year or growing the company the best, but you don't get investors recognized. So we did that, and then last year we created the Siggy Hall of Fame, where we will take not only angels but early stage VCs as well and create awards for them.
oh, cool. So is that, I mean, one of the things that we talk about and we know, and you mentioned this, that, the nature of the South is that we don't really have this word of mouth of, hey, did you see this deal? I mean, I don't even think angel investors, when you go to meetings, they talk about the deals they just saw, even though they both saw it, right? It's like, it's also hush hush. How do we go about creating more awareness of this way of investing to create wealth in our community?
Well, the biggest challenge we got is convincing people to be willing to take more risk. Because as an angel investor, particularly in the early stage, you got to be willing to take risk. You're not going to win every deal. And so we are still trying to figure out how to do that. Part of it will be to get, and I hate to say this, my generation out of doing the investing because my generation is one of the one that's still very conservative. I think the newer generation are opening up more. You have Blake Patton, you have Jamie Hamilton, you have Andrew Dorman, you have Richard Shrame, you have a number of people who now are beginning to come out. Now they tend to be more VCs. Blake is not. I think here a good example of Angel. So we just had to find more people like that and get them involved. The Atlanta Technology Angel keep trying to get new people. You have the Thai Angels. And so you just had to continue to nurture, but you got to find people who are willing to take the risk. Real estate investors don't like to take risks in something they can't hold.
Well,
You know,
the other thing I'll say is having ran my own fund, is you got to diversify. You got to do multiple investments. You can't be one and done. You have to look at it from a portfolio standpoint. That I'm going to do 10 angel investments, not one or two.
Right. And that why being a part of a group is a great ideal because you get to see a greater variety and you get to invest maybe in something that you don't understand, but somebody else does that you trust.
Mm-hmm.
Because as an angel, I believe you need to invest in what you know. I don't do bio, I don't do pharmaceutical, I
Uh,
don't understand any of that. I don't do crypto. I just don't, that not my cup of tea. So I like to invest in what I know. But if I got a good friend who is part of the angel group who knows something about it than I do, I can rely on him and invest through that angel group.
yeah, I mean, you take a look at a Bitmine immersion where I'm president. It's not my job to be the crypto expert in the group. We have board members with PhDs that teach at Wharton and Fordham, and we've got Tom Lee as a chairman. I'm not out there competing with them. I'm out there doing the things that they don't do.
Right.
The things that are behind the scenes that keep everything running. And
Yeah.
you got to have a very good team that you work with, and members that bring complementary, not competing skills to the
Oh,
table.
yeah. And you look at both ATA and Pi Angels, they do a very good job
Yep.
at doing that.
So I noticed in Karen's notes here that one of your hobbies is coin collecting, and I find that interesting. And had a coin collection as a kid, and eventually I kind of spent it, and now I wish I had those 1940 pennies back. And, I had a buddy I worked with for years on a number of projects, and he did some coin collecting, and he got me re-interested in it because of his philosophy of how to get the coin collection to pay for itself. But I was wondering what got you interested in coin collecting, and what's your philosophy with it?
Well, I got involved with it back when I was coming out of high school. And I used to work for the local bank in my hometown.
Mm-hmm.
And the head of the bank was a coin collector. So he got me interested in it. And so, and I come and go. I'll work on it for 3 or 4 years. Then I might take a year off or 2 years. And, you know, I, I don't do it to make money. I do it just to put together a collection. I invest in US coins only. Now, like the 1964 Kennedy hot dollar, when
Mm-hmm.
that came out, I bought a ton of those. Uh, Not sure why, but I did because once you get more than 5 or 6, you don't really need it. But
Yeah.
so I do that. And the one interesting coin that I have is in 1980, I bought a Cougaran. I was actually in South Africa and I bought a Cougaran. At the time, I paid 800 and some dollars for it. And it was the peak of the gold market for a number of years. And then the gold market went down for a number of years. And I never sold it. I just put it in a safety deposit box and let it sit. Now it worth about $3,000.
Yeah.
Yeah.
I collect coins with my oldest son, who turned 13 a week ago today, and so he likes it because it's something we do together. And then I try to teach
Yeah.
him how to value things, and then the less valuable coins we can get rid of and keep the more valuable ones, and
Yeah.
it's a lot of fun. And then I've got 2 more boys. The next one turned 5 today, and so
Okay.
I imagine they're all going to want to get involved with something.
Oh yeah, well, you can do that. I used to buy fruit coins and all of that. There's sets I done every year for a number of my kids. And they never all but 2 of my kids never appreciated the
Yeah.
coin collecting.
I,
2 of
So
them
my
did.
My grandma collected coins. Whenever she would go on a trip, she would have them. They were like in the cardboard thing with the cellophane on them. Some of those, and
Yeah.
I was the only grandchild that took an interest in it, so I got her coin collection. And I haven't really added. I mean, I went through the phase with the quarters when they first came out and doing
Yeah.
that, but I didn't get any minted ones. And so, it's I like to go and I look at them because it's fascinating. Some of these coins, and I keep saying when I got them, I told my cousins, the other grandchildren, that like I'll figure it out and I'll make jewelry, keychains, or something like that for the people in the family, so they have a little piece of grandma, but. I haven't gotten around to that either, but I
Yeah.
saw that on your list too. That's why I laughed, because I was like, you don't see a lot of people that say they're coin collecting, right? So that's
All right.
Well, it used to be a lot easier to get coins to sort because we paid cash for everything, and
Oh yeah.
I'd come home every night and pull my change out, throw it in a box, and
Mm-hmm.
a year later you got a couple $100 in change, and
Yeah.
and now everything's a credit card, so it's just tap and go.
Oh yeah. Well, when I worked in the bank, I would buy boxes, say quarters. I would buy a box of quarters. It would be $100 worth of quarters. Take it home, unwrap them, go through them, reroute them, and then take the back and sell it back to the bank.
I got a buddy that believes you can tell the state of the economy by the age of the coins you get at the convenience store.
Well, you don't get coins anymore, though.
I don't, but he does.
Oh, maybe he does. That raises an interesting question. Are we going to become a paperless society at some point? We're
oh,
doing away with pennies now because it costs more to make a penny than it worked. So, we'll do away with pennies now, and who knows, a couple of years might do away with nickels. And
Well, there's billions of pennies in circulation, but if you do, if you price everything in a nickel, or if something ends in a 3 cents, how do you pay for it or make change if you don't have a penny? You just
you round up or down.
you round up or down, and who eats it, and if somebody doesn't, can you deny service to someone who doesn't have a credit card?
Oh, yeah.
wait, another topic, too deep for this show. For that, that's a whole nother economic conversation that we
Yeah,
get
I think
Yeah.
I'd rather talk.
what ifs, and it may or may given there's billions in circulation, and I can always go take my worthless pennies in my coin collection that are like worth a 1.5 cents
Uh, yeah.
and
Yeah,
put them in circulation too. So
I think I'd rather than talking about that, whether no credit card. I think I'd rather talk about where interest rates are going based upon inflation. That'd be easier.
yeah, no,
To
also another conversation. So
Well,
as
but
we
we had a good report today. Inflation did not go up in July. It stayed at 2.7. It was projected to go to 2.8. So that was some good news.
I swear to God, I saw trailing PCE at or PCI at 3 even or 3.1. But
Well, it depends on how you calculate things too.
always.
Always.
yeah, I mean,
All right, getting back into angel investing, Sig. So,
Yeah.
as we wrap up here, anything else you'd like to add to our entrepreneurs and investors that are listening? That golden nuggets of your worthwhile and productive experience.
Well, I would encourage investors to become angel investors. Where you do it by yourself, where you do it in a group. We need angel investors. Because the economy is built upon young companies, and we need the company to continue to be able to grow and become bigger companies so that the venture people can, invest in them. But I believe to be a good angel investor, you need to have two reasons to become one. One, you want to make money. Now, the second one can be one of like two or three reasons. You are looking for a job, you're looking to stay current in technology, or you are looking to give back to the community. I do believe you need to have one of those three in addition to wanting to make money to really be a good angel investor and to give back to the community.
I
I agree.
wholeheartedly endorse that. I mean, I've built this podcast, my books, the training that's coming out, the Compassionalist Academy, all of that for that purpose to help people feel confident and competent in learning to and getting started and getting better at angel investing and crowdfund investing for next generation that's not quite there, building up the next generation of 35-year-olds, 30-year-olds
Yeah.
to be able to become, proficient at discernment on deals. And, it's been my passion and mission for at least the last decade on providing
Yeah.
the tools and the education for that and just working on creating awareness. So thank you very much for commenting on that, because I always say people invest. Every investor, the reason why I came up with Compassionate Capitalist as a name, when I first met investors and I took over NBA and it was, how'd you become an angel investor?
Right.
And they came in because there was no training back there at all, and it was somebody invited them. They started investing. They lost money on their first few deals, but just but figured things out and kept on. And I'm
Right.
like, well, for you to learn by losing, right? And like you're losing money, and then can you continue with it? That's a fortitude that, unfortunately, a lot of people that dabble in it don't get past three, and which contributes to the perception that it doesn't work. But
Right.
you're a clear example. A lot of people, diversification, longevity is the mechanism, is the means to create the kind of returns that Google says that it's 3 times more profitable than comparable investments in real estate and stock. And now we know that everything is risky, so you just have to add it to and learn
Yeah.
how to do this one and make more money, because millionaires have been doing it for a long time, not for the benefit of throwing money away, but for the benefit of making money and having an impact with their money to bring innovation to market and solve the world's problems.
Well,
Oh yeah.
what I'd like to add is it's the access to capital that makes our economy function. Every big business
Right.
started out as a small business. You know, there is a capital ladder, as I like to call it, and at the bottom end of the ladder, that everything else kind of depends upon is angel investors. And if you got experienced angel investors, they're going to increase the chances of that company being successful.
Yes. Yes.
Sometimes very dramatically.
Oh yes.
So last word, Sig.
No, I think I have given my last words.
Okay, all right. So with that, everybody, thank you for tuning in. Thank you, Sig, for listening. I mean, for joining us today to go through this. We've had a great conversation, learned some things that maybe not a lot of other people know. So I encourage people to like, subscribe, but most importantly, share this episode, on LinkedIn, wherever you listen, wherever you are, so that other people can learn from this, prolific and successful compassionate, can't even say my own words, compassionate capitalist, Sig Mosley. Thank you so much for being on the show.
You're welcome. I appreciate you having me.
Onwards and upwards, everybody. Have a great day.
All right. Thank you.